All right, good afternoon, everyone. Hope you guys are doing well. Here we go. Friday afternoon, recording this video after the close. Pre-week, this is the third week in a row that the markets has been red, but it hasn't been this terrible drawdown that I think all the macro bears out there in the world are trying to see or wanting to see this come down to 3,500. It's so far, to me, over the last 3 weeks, it's been quite exhilarating in terms of the whipsaws, the V-shaped recoveries, and but overall, I mean, we hit 4,200 about 4 weeks ago, and we're here at 39. About 250 points later, we closed right above the SMA 50. We're looking at SPX weekly here. If we go to the daily chart here, yes, over the last 3 weeks, the S&P 500, 250 points, less than about 100 points a week. It doesn't spell this major fear to me. Certainly, with all the hot inflation data, especially the PCE that came in this morning, certainly that's a cause for investors' concern throughout the market. However, it just hasn't been this. I guess the best way I could describe it is just a very orderly step down or a staircase down. It hasn't been the elevator down that a lot of people are hoping for. So I'm still cautiously, optimistic about the future, and still a little, I guess, short term looking for a bounce here, and I'll tell you why. So here we go. Here's your SPX standard daily chart. Here we got a doji on the day. We held the moving average 200 perfectly at 39.40s and then bounced. Okay, we're having trouble with that 50 moving average, so we're gonna have to see how this plays out for tomorrow. But let me go ahead and just hop over to the SPY again. Once on the weekly chart here, we did close right above the moving trend line here, the lower trend line, which they call the mother of all trend lines. But you got kind of a weekly hammer set up here. This week has been a shorter week, so not enough volume to justify anything. However, this is the third straight red week on the markets. Over on the SPY, though, I mean, I want you guys to check this out, how interesting this is going to be for next week. Now, we don't have a ton of data next week. There's some PMI, ISM data going next Thursday, Friday. I don't see many Fed speakers on schedule for next week, only a few, but there's no inflation data next week, which is great, right? And hopefully no Fed speakers. But however, we held the moving average 200 nearly perfectly, this blue line here. This is the lower trend line dating back to October 13th, and we've been bouncing here in this area. And today we actually closed below it. Okay, so that's a cause for bearish concern. Okay, however, I really like this bounce off the MOAT, the actual mother of all trend lines here that everybody's dubbing here. So it held where it needed to. Yesterday, we saw the same thing. It held where it needed to, but we did close lower today, but a green candlestick. You got a daily hammer, all right, kind of wedge in this interesting area between the 50, the 200, and the MOAT and the lower trend line, okay? So it's really going to make for an explosive bounce next week, or the bulls are just going to give up and it's just going to go right below the 200. However, from what I'm seeing here, at least the volume is here to justify a short-term bounce. This is the highest volume we've seen over, not since, January 6th, beginning of the year. All right, definitely not as close to volume here, but definitely this is a good volume, and the bull is jumping in to save the market here at the moving average 200, right where it needs to. All right. And especially you saw at the end of the day, we jumped like nearly $1 from the dip here. It went to 395 to 396, $1.50 in the last minute here. And you can see a rush of volume on the 5-minute chart here. So given the fact that there's no data next week, there's no Fed speakers, I think the market is due for a little bit of bounce. Certainly this week hasn't been the best. Obviously, you had like at least 10 Fed speaker engagements this week. Everyone and on the FOMC committee spoke this week. All right. So it's been wild. All right. So what am I looking for next week? The first thing what we got to do if you're a stock market bull is we got to hop over the moving average 50, which is right about the right above 397. Okay. If we can clear 397, 398, we can effectively come back over this lower trend line here and start retesting some lows here. Okay. So given the fact that also your CCI and stochastic is now on, at least on a daily perspective, is now in the oversold territory, I do expect a bounce. All right. But give me a nice move over 397, 398. All right. This moving average 50. If we can close Monday above it, I'll go bullish. Okay. At least for a short term to see a bounce towards 402 next week. All right. Or at least try to use this as support and try to make a higher low. All right. So that's my projection going into next week. And I'll tell you what, and the reason I'm saying all that too is I'm looking at SPX, okay, on the 1 hour chart. All right. Or even let's just go for a 30-minute chart. How many gaps are there? All right. There's a gap here at 40.89. There's a gap here to be filled up to 40.71. In addition to that, there's a gap here to 4,009. So I expect at bare minimum that SPX will retest 4,000. And if it can clear that, it should be able to move, close this gap here. Now, with that being said, let's take a look at the VIX. All right. So we have to take a look at the VIX. And on VIX daily, you have a shooting star candlestick. The VIX is now overbought slightly. I do believe there are some gaps here. Yes, there is. There's still a gap to 21.17. There's a gap to about 20. And there's an open gap down here to about 18. So there are, I suppose, a good reason to be a little bit more optimistic for next week. We had 3 straight red weeks on the S&P 500. There should be a nice bounce next week. At least that's what I'm thinking. All right. So with that, let's go over to our 1 hour chart, our mother of all charts that we've been tracking over the last, since the beginning of this year, pretty much. This is the 1 hour chart here. All right. So you can see so far, slight bear flag here. I do understand that. Like I said, we're pretty close to breaking this MOAT line, this mother of all trend lines. And we need to see a move, at least a successful retest of 398 to move back into the 400, potentially 400 area for a reversal. Like I said, I think we're slightly oversold. Of course, being oversold doesn't mean there's going to be a bounce immediately, but it's the market could see some type of accumulation period or some chop, if you will, before another move back up. And TrendSpider is not working right now. Let me pull this back up. Okay, let's go ahead and take a look at the tech sector real quick, okay? All right, tech sector held where it needed to hold, okay? Moving average 200. You saw back here in February when we actually bounced off the moving average 200 on this dip here and went to nearly a brand new high of 313. And this looks more like, to me, of a falling wedge on the daily, and especially on the hourly chart, more than anything. Okay, so watch out here. Now, these dojis, all right, doesn't always mean we're going to get a bounce. So obviously, there's a lot of things that could be concerning the market and earnings, et cetera. And you saw NVIDIA earnings this week in the tech sector did all right, but it's the PCE data that really messed up at any chances of a bounce. Q, it's got to hop over to 393 next week. Okay, I do expect a little bit of snapback and a bounce. Look at the volume today. At the last minute, the rushing volume came in, and we're very much worse oversold on the Qs. So I do expect at least a move to 295, 296, retest 295 to 296 tomorrow. I'm sorry, not tomorrow, next week here. I'll put a target of 296 for the following week. Okay, so once again, next week target 397. If we can clear that, 402 is a goal here. We'll worry about all this in another day, but I do think it's time for a little bit of relief bounce. All right. So with that being said,